Perseverance means you keep striving until you conquer. You only lose if you give up. And my friends, we never give up. 10 to 15 minutes each and every day. Stick with it until you learn it. Let's jump into these charts. Everything up for the day except bonds. Now, let's see where we are with stocks. We saw on the S&P 500 where things were sliding sideways and down some for the last few days, but we have not seen it go from green to red on the STC. We're in the right place for that to happen. We see over the course of the day, not much going on in the morning. Well, a lot of indecision we see, but a doji in the morning settling out just flat on that. But when we look at where things went in the afternoon, booming up, not as high as we saw in the morning on Tuesday, the 18th. But again, up there close to it. So what are we waiting for? Well, we've seen it stall out again at about the same place. We'll be paying close attention on Monday to see which way the market is going. If it starts to keel over and move down, goes from green to red like it did back after this last, look at that, happened. We saw things starting to move down strong on Friday afternoon. Then Monday was our trigger entry point. And of course, how did we do on that trade? With all that volatility we saw in the morning on Thursday the 13th, 4.06% in 1, 2, 3, 4 days. That was quite beautiful. We'll see if that sets us up again for a move like that. Remember, the 2-day is still negative, and we can again see we've not reached that high back on Monday, but we do have some ranging in there and green candles going up. And weekly, how did we end up? Green spinning top touching the 200 EMA on that weekly chart. And again, we're still negative on the STC. So we're at a negative 14, ready for it to be a 15, so we can jump into a down move. Let's see where we are on the S&P 500. Again, we'll stretch this out a little bit so we can read those candles a little better. Things were sliding sideways for several days. Of course, about the same time period, we stroked out on a nice move, 4.76% down. And in that same volatility time as the S&P, we cashed out on that move. Since then, sliding sideways up and then sideways for the last few days, bumping up on Friday afternoon after pretty much a doji in the morning. Dojis, of course, mean lots of indecision. You have it ranging back and forth. Not in the afternoon, though, and we'll see. Things will die off about here at the 277 level and then roll back over. We'll be ready to jump into another down move. Same thing as the S&P. You see the 2-day, some green, small green up candles. Spinning top is the last one. Still red on the STC, which is our indicator. Still red on the weekly. Green spinning top for the weekend. Unlike the S&P 500 bouncing off the 200 EMA, we are below it, bouncing down instead of up. So we're not pushing through, we'll just say. So again, if we had to choose on a down move, we have more downward energy and momentum, of course, in the NASDAQ 100 versus the S&P 500. I hope you're taking notes on all this. You'll be ready to jump into potentially a down move on a practice trade as we get into this next week. This is the weekly review and forecast. So we want to look at what we did this last week, where we're going this next week. So with the S&P and the NASDAQ, we are looking for the potential of further down moves. It may happen, may not happen. The charts are going to lead us. We're not going to guess. We're going to follow what the trends tell us. Now, where are we on bonds? We had a nice trade on bonds. Let me get on that half-day chart to start. And of course, we had a nice bond trade. Let's open that up some. 2-to-1 risk to reward ratio. We cashed out at 2.83%. Of course, what did things do? They slid sideways for a day and then just precipitously continuing to move down. Strong down in the morning, recover some in the afternoon. 1.8% down for the day. Going to have to wait for the STC to reset for. We're going to jump into bonds. 2-day, of course, still hammering down weekly. hammering down also on bonds. So we'll keep an eye on things, watch for an uptick and a restart so we can reset that STC and hopefully jump into another down move. Where are we with gold? Well, gold up for the day, 1.78%. Nice to see gold ticking up. We're well below that 200 EMA exponential moving average, so we're only looking for short trades. Remember, for below the 200 EMA, we're in a downtrend. We're looking for down trades. We're going to go with the momentum. We're going to go with the trend. If we're above the 200 EMA, we're looking for up moves. That would just be buying gold outright in our practice trades. So we made a nice 2.34% over the course of several days most recently. And of course, I think we ended that trade, yes, on Wednesday. Wednesday morning it cashed us out. So we're waiting for this to reset. Nice to see it going up. Want to see it move through this center darker area, reset up at the top like we saw before when we took that last move. So we got to have the STC reset. We look where we are on the other charts. Of course, on the 2-day, we can see where it started moving down back on the 19th. We have a red spinning top for right now. The 2-day gave us some concern in this last trade because it was green, but it worked with us. And what do we see on the weekly? We're negative below the 200 EMA. So again, got a lot pushing us down both on the 2-day, weekly, and of course, we're waiting for the half-day to reset. That is where we are on gold. Let's look at Bitcoin. We go to XBTF, that is the Bitcoin future, short-term future close month chart. What do we see there? 0.86% up for the day, but you just see red here, flipping back over to red in the afternoon on the STC. We're not trading on the STC right now. We are just waiting, watching, seeing where XBTF is going, waiting for things. You look at this 2-day. Let me peel this in a little more for you, and you can see just exactly what it is we are waiting for. We're hoping that we're going to find a floor here around that 1820 mark or so. We've hit it a few times. We pushed through it a little bit back on that 2-day candle on the 13th of last week, but we're hoping we're going to continue to make this base here. We're not going to have any huge drop-offs for lower lows. Hopefully that won't be happening. And of course, on this weekly chart, you can see about the same thing. So I hope we're building a base. We're waiting for Bitcoin to take off again in all the crypto space. I will be releasing today the charting crypto and commodities for all you guys, so I hope you enjoy them. This is the end of the major show. If you want to hear me answer a couple of questions, I'm going to do that. I do encourage you, send those. We'll always try to get to those on Friday, at least, if not before. Look at a couple of questions for you. The first is on, this is a good one. Can you talk about strategies for 401ks, especially during volatile markets? The line they always give is to stay in and keep investing. In the long run, it does work, but you end up having to make up a lot of ground before you get to where you once were. You also don't know if you'll lose 20, 30, 40 or more % before bottoming out. There also don't seem to be good ways to chart most mutual funds. Well, I am not going to pretend to be a financial advisor. I am not one. I don't give any market advice. I'm not going to tell you what to do with your 401k, but I'll tell you what I do with mine and take it for what it's worth. Many years ago, I paid to have a new plan drawn up by an attorney who specializes in 401ks. They drew up a new plan for me that allows mine to be self-directed. And of course, if you have your own company, you can do that. If you work for a big company, you're sort of stuck with those funds. And mutual funds, my own feeling on mutual funds, I'd never put my money in mutual funds. Why? Would I never put my money, not telling you not to put yours, but the reason I'd never put my money in mutual funds is, like this person's asking, it's very hard to chart. And guess what the value of the mutual fund is? It's whatever they tell you it is at the end of whatever day you want to withdraw it. I'm not interested in that. I want to trade something that is liquid, like, oh gosh, if I have a mutual fund that tracks the S&P 500, why wouldn't I simply want the Spider S&P 500 ETF trust? I can sell it any day of the week. You can see what the bid and the ask is up over here on this side of the screen, and it is pennies. It's not dollars, and it's automatic. When I want to get out, I get out and I'm done. So I don't like mutual funds. Now, there are, and again, that's me, not giving any advice, just telling you what I do. So I have a self-directed 401k because I own my own company. I set it up that way. I can put my money into whatever I want it into. If I want to invest it in real estate, if I want to invest it in the stock market, if I want to buy commodities, whatever it is, I can do that. So I self-direct my own fund. Now, if you self-direct your own fund, if you can, of course, you can do whatever you want to do. If you can read a stock chart and you can follow something like the S&P 500 through SPY, and maybe you have all your money in a mutual fund that tracks the S&P. Maybe you don't have a choice. You work for a big corporation and that's what you have to do. Well, you can track the S&P 500, and when you see big trends underway, like check out the chart right here. When you see big trends underway and you see things go from green up candles to red down candles, you know, what can you do? Well, you could just sell and wait. Now, there is a lot of stuff to talk about there. You better know what you're doing. You're going to hear over and over again that, hey, you don't want to get out of the market because you're not going to know when to get back in. We've got a good training on, actually, I think I released it this last week, and it's a whole thought about dollar cost averaging. And if you've not listened to that training, look it up. It's available at YouTube, dollar cost averaging. I don't have a space to put it in today's video because I got so much more stuff to share with you, but those are just my thoughts. If you can control your own destiny, if you can learn how to do this, you know, you have potential options. Not giving anyone advice. I'm very careful never to do that. Don't want to step on the toes of any trained financial advisors who may be being paid to advise you. I am not, and I am not qualified to advise you and won't pretend to be so. Hope that helps. Now, let's move on to questions about BITI. Some of you have gone and backtracked allegedly. BITI, that is the ProShares short Bitcoin strategy, just like we have the funds like XBTF. We also have a short fund. And again, it moves just like our other shorts do for the S&P 500 SH, for the NASDAQ 100 PSQ, for 20-year bonds TBF. Those are all short funds that move opposite, negative one times, whichever way those underlying ETFs are. Well, we have one, BITI, that moves opposite of Bitcoin. And that gives you the ability to potentially short those trades. And you might say, how do I do that? Well, we teach it all the time. The last trades we did on the S&P 500, the NASDAQ 100, 20-year bonds, and gold were all short trades. The only one you had to actually put puts into your practice trade was gold, because we don't have a satisfactory inverse fund. You have GDZ, but it's too illiquid for me to bother with. So I go to puts in that regard. Now, when it comes to BITI, here's what the question was. It moves, but it doesn't move reliably 2 times average true range. Can you trade with less movement? And the answer, and what I got from more of the question there too, is moves about at best 1 time average true range. So can I work to trade it? And I would say, you got so many other things to trade. And if you're going to be risking not a 2-to-1 risk to reward ratio, but a 1-to-1, you better be able to go and backtrack and see that you're consistently well above breaking even with 1 up trade works, 1 down trade doesn't. Because every time you're not getting a 2-to-1, you're just getting a 1-to-1. So you're taking a lot of risk there. So again, unless it proves itself to you, got like an 80% plus win rate. means you're losing 20% of the time, I don't think I'd bother with it. I'd find something else better to practice trade. Okay, lastly, what do I do to quickly understand your methods and thinking? I will tell you, and I'm going to put these at the end and throughout today's video. You want to watch, listen, take notes on the wave technique. You also want to watch, listen, and take notes on the always winning formula and on the success multiplier formula. And you want to set up the charts as we describe them. That will get you going. It's all the time we have today, my friends. So appreciate you being with us. Patreon members, thank you for your support. If you want to help us out here, support us on Patreon. We have lots of great stuff for you. The first and foremost training for free for Patreon members. Options Made Simple, the Charting Wealth Way. Love you guys. Take care. God bless.